There's one setup that I trade every single day. It is stupid simple. It's extremely reliable, and it's why I'm able to consistently have days like this, and this. And after 9 years in the markets, if there is one thing that I've learned, it is that stupid simple always wins. You see, the harder that you try to make trading work by learning complicated strategies or adding indicators to your chart, the worse a trader you become and the more money that you will lose. If you're not consistent or confident in your trading right now, well, chances are your strategy just isn't stupid simple enough. So today I'm going to show you the simplest trading strategy that you have ever seen. It is called the first candle rule, and it's so simple that even a complete beginner couldn't mess this up. And just to prove to you this works and give you the confidence you need to execute this consistently, I'm gonna back this up and test the strategy with you live over the last few weeks of price action. And by the end of this video, you will have everything that you need to finally become a profitable trader. Do you consider yourself someone who would follow through with the strategy if it were proven to be profitable? If the answer is yes, then you're in luck, because not only am I going to teach you a proven trading strategy, everything from the context to finding the best markets to trade it in, to finding your entry, stop loss, and target, but we're also going to backtest this strategy so you have the confidence you need in order to execute it consistently. And on top of that, later in the video, I'm going to be giving away a free 100K prop firm funded challenge for you guys to trade this strategy on. Step number one is the first candle rule. Now, you may be wondering, what is the first candle rule? Because I've never seen this talked about anywhere online. And simply put, all the first candle rule is that the first 30-minute candle of the trading session tells you everything that you need in order to trade profitably. Now, this works for any market, futures, Forex, crypto, stocks, it literally works for everything. The key is making sure that you pick the correct timings for your trading sessions, which we'll get into in just a second. Now, in this example, we're using NASDAQ or NQ, and this is the futures market, so we're going to be using 9:30 as the first 30 minutes of the trading session. And this one candle is going to give us the directional bias for the day, where to enter trades, where to put our stop loss, and where to take profits. Now, you may be wondering why. Why this candle? What is so valuable about this candle? Well, this candle, which is the first 30 minutes of the day, has the highest amount of volume and highest amount of traders entering the market of the entire day. And there are two key levels that we're going to mark out on this candle, which very simple is just the top of the candle or the candle's high, and the bottom of the candle or the candle's low. Now, the reason we mark out these levels is because these, at this time of the day, when we know the most people are active, these levels are where the most amount of selling happened right here and the most amount of buying happened down here. You go to the 30-minute chart, and if you want to mark out this high and low, you go on TradingView and you can just pick this trend line tool right here. Before this strategy will work for you, you have to understand how to avoid choppy price action, because this is why you're unprofitable. Truth be told, most of you guys aren't bad traders and you probably know enough to make money, but the one thing that is missing from your trading is that you don't understand how to identify choppy price action and avoid it, causing you to keep getting stopped out of your trades. Now, I see this get thrown a lot. You hear low probability, high probability, and I think people make this way more complicated than it needs to be. All this means is that in a low probability condition, you're consolidating. And when the market's consolidating, you're going to have bad trades. We don't want to trade this. We want high probability conditions. We want volatility, meaning that the markets are going to move aggressively, giving us room to execute trades with good risk to reward and with a high confidence that the trade's going to win. This is how we find good trades. And for most of you, identifying high probability conditions alone would eliminate 90% of your losing trades and make you a profitable trader. So if we've identified that high probability conditions are just because of volatility, then what do we want to look for?